Alright guys, hello everyone, and I welcome you today on our today's streaming session. So I'm Stan, a senior trading specialist at Exness, so I will be leading this session today. So let me just make sure that everything works correctly. Well, I guess so. So thank you for coming, and let's get started. So let me read something in chat first. So we have a couple of people already joining and posting messages. Okay, here to learn, make a lot of losses today. Too bad, but well, that's trading. So I just encourage you to be a little bit more cautious when you are in a losing streak, when you are in a drawdown. So we all been there. So yeah, you will be back if you do everything right. You will be back. Just don't overtrade and keep your loss limit for the day. For example, 2 trades per day maximum, or per AD, I don't know. So at least that works for me. For example, when I'm in a drawdown, so I just limit my activity to 2 trades per day, minimize loss limit. I don't lose more than a certain percentage of my account, let's say 1% of my account. And then if I continue making losses 2 days in a row, so I stop trading, I take a break for 3 days. So that's how basically it works. That's a survival, guys. So you need to survive. I mean that not every time you can make profits. Sometimes there are conditions in the market when it's tough to make profit with a strategy. So you need to preserve capital, and preserving capital is a little bit less easy, or I mean it's more difficult than making profits when the market is good. All right, so hello guys. So yeah, I mean, where are you from? So give us your location if you can. Watching from India, New Delhi. Hello India. Okay, Nasdaq 100. So we got people from India today. Well, that's nice to see. Usually we have South Africa on board. Now India dominates, I think. But I guess the South African guys also will join. We hope so. All right, guys. So yeah, today's streaming session will be another session for preparation for the week, market analysis. We will go through step by step, top-down analytical process, and we'll try to ground these ideas in the form of a trading plan. So last week was pretty interesting. So Euro USD had skyrocketed after a relief of tariffs. Donald Trump, the US president, had lifted some tariffs for some countries for some number of days. It's going to be probably 90 days, but the markets got a positive effect, except for China, of course, because China is still pretty, there is a pretty big tension between China and the US. So S&P 500 jumped 12%, so that's pretty remarkable. DXY, the American dollar index, collapsed, and Euro USD was on the verge of growth. So that was a pretty nice growth. We've been speaking about that on our previous streaming session. All right, so without further ado, let's just go to charts, I think, and try to understand if we have any opportunities today. Well, we definitely have, but let's try to find something really interesting today. All right, so I am showing you the Exness terminal. So I remind you that if you want really to find some inspiration for your analysis, if you don't have any ideas, you can go to analyst views. You can go to Exness personal area to analyst views, scroll it down. So we have a bunch of ideas provided by the independent vendor. This is the Trading Central vendor, so it provides it gives different ideas. So let me just make sure that you see what I'm showing right now. So for example, Forex ideas. Okay, so I think that we need maybe to really quickly adjust the window to the so that you see everything in detail. All right, let me do that. Let me do it really quickly. Okay, I think we are better right now. So yeah, it is better. All right, so for example, if we scroll it down, you see the idea for forex pairs, crypto stocks, indices, whatever you trade. For example, I don't know, you might trade Hang Seng, for example. Here it is. Here is the idea for Hang Seng, and you can find it here. All right, so I guess that might be valuable. If you don't yet have any ideas, if you don't have inspiration, you can go straight to Exness personal area, go to analyst views. Also, we got economic calendar here, market news. So if you want to get the idea of what's going on in the market. So let's maybe quickly scroll through what's going on in the market. So Euro USD turned sideways while Donald Trump erratic tariff announcement keep USD on the back foot. Yes, exactly. That's what's going on right now. But I want to start with just a quick overview of a previous week. So yeah, we got the 9th of April. We got a really big spike for the Euro USD and the pressure for the DXY for the American dollar index. So money flows out of the US assets. Money goes out of treasuries. So treasury bonds are declining pretty massively since April 9th. And money flows out of the US assets. Money flows out of the American dollar. That's interesting because usually they have a different correlation. Whenever money goes to, whenever treasuries decline, so money goes to American dollar because everybody wanted to invest in the American dollar not so long ago. Now people are not so eager, investment banks, hedge funds, they're not so eager to invest in the American dollar. They don't want to buy more treasuries, so that this is a sell-off. And that's interesting because treasury bond market starts to behave like a stock market. That's quite uncommon. All right, so that's the first observation. Well, I was showing gold you, by the way, not Euro USD, but here it's Euro USD. It's the same, basically, same dynamics, okay? All right, so everything is at the peak. Gold, Euro USD, so what else do we have? So Bitcoin is still not peaking, so it's not showing any substantial improvement since the previous week, but it's still the improvement, still quite an improvement. April 9th, April 10th, so it's still going up along with S&P 500, so the same situation you see, S&P 500, it's going up. Well, guys, I will warn you from the euphoria, potential euphoria, to not jump in quickly here in such a situation because the situation is really quite insane. So you see this growth for S&P 500 was associated with a 12% of worth of growth. Well, that's a lot, and usually that's a marker of a bear market. So what do I mean by bear market? Bear market is the market when you have a pullback and then in some time when the news, other news will come in, so market may collapse pretty quickly and go down. So that's basically the behavior of the bear market. Well, why am I referring to the potential bear market activity? Well, if we scroll back, for example, to, well, first off, why I'm thinking that we are in a bear market right now, because VIX or volatility index still is pretty high, so it's holding above 30, it's 33-ish. So it's pretty high. Just look at the COVID situation in 2020. I know that's a different situation, right? Everything was locked down, so that's a different situation. But just take a look how market behaves in a high volatile environment, specifically S&Ps. You might not trade S&Ps. You might trade gold or currency pairs, but S&Ps is the best measurement of a market fear. So whenever something happens on the S&P, it just reflects or transitions to other markets as well, on gold, on currencies, whatever else. So because the American stock market is probably the largest investment market in the world, so you see those big bars, it's just also 10% up, 10% up again, or maybe 7% up, something like that. Market collapses, 10% up again, something like that. So on the bear market, these corrections are pretty big, so pretty notable. Sometimes they just give back up to 50% of the previous move, and that's exactly how it works. We had a similar situation, let's say in 2022, 2021. Volatility was not as close as it is now, or it was in 2020. So that's a different story. Of course, market just drops, and then it retraces. But you see those retracements are pretty small. There are no huge bars or huge candlesticks of 10% growth, nothing like that. So 2022 was a different story. Okay, was a different story. Now the markets had collapsed. So two very or 3 bad days for S&P 500. So it's associated with some kind of financial crisis. We never know, maybe the situation will stabilize. Currently, economic conditions are not that bad in the United States. So we've seen pretty stable labor market. Inflation is stabilizing, so it's not going down substantially, which might be the recessional signal. Recession fears are still here in the market, but currently the behavior of the markets in a high volatile environment is pretty unstable. So with that, I will suggest that let's do some kind of market structure. We are starting with S&P 500, but we will switch to your favorite markets, guys. Don't worry. To gold, whatever you trade. All right, so we have 20-day moving average and 50-day moving average just standing right near the price. So that's the retracement to the value area. That's interesting. So because I think that some pivot or turning point for the market might appear pretty soon-ish. Also, let's put here the 200-day moving average. That's a long-term reference and it reflects large trends. So market is deep below this line, meaning that the uptrend was broken and market had accepted the area below this 200-day moving average line, so which had happened in the beginning of March. So what I'm saying here is that currently we're in a confirmed downtrend. The market had peaked, corrected, but now is located in a zone which we call the value area, the distance between 20 and 50-day moving averages. So that's a problematic area. So unless there are any really, I don't know, any really good news coming in, but I don't see them coming, to be honest. So market might turn in this area, inside of this area. We don't know where exactly it will turn. Maybe it will turn like today, because it's basically tested the area which we call the value area, tested it yesterday. So now it might be probably the second day of the decline. So let's monitor the behavior of the market on the American session. So this is pretty unstable situation, not very stable. When the American market will open, so it might actually initiate a sell-off. So let's watch some economic news publications here. Manufacturing index, New York Empire State Manufacturing Index, a sentiment indicator, not very important, but it might, in context of a negative sentiment, it might still be the trigger for further sell-off. Retail sales, yearly basis, industrial production, month-to-month basis, so it's going to be published on April 16th, which is tomorrow. And Thursday, of course, Philadelphia Manufacturing Index, housing starting and building permits. So yeah, this situation points to a potential weakness or potential fragility of the situation. So let's monitor for that. How do we time the market? If you want to sell, for example, how would you time the market? So the best course of action is to wait for bullish traps. Guys, don't be caught in the trap. And bullish trap means that, for example, the market breaks, then it doesn't hold the breakout, then it collapses, something like that. And that might be the situation of a bullish trap. So whenever you see the bullish trap, you can carefully craft your positions out of when the trap fails. We got some feedback here. Sir, please adjust your screen. We can't see the full screen. You can see the full screen, yes, but I mean, you see the sample of the chart, right? So, okay, so it's better for you to see the full screen. I will show you the greater sample of the chart, okay? So because we have here frames that we need to use during the streaming session, so I cannot eliminate it completely. But I think that you understand that I'm showing S&P 500 index, and that's potential scenario which we might build. Potential sell-off, so we are monitoring for the situation. All right, What else do we have? So interesting situation might be building on Euro USD, right? Because it's on the new peak. So just let's take a look. Whenever that happens, so obviously the market jumps far away from any support zones. So it's quite unrealistic to search for any positions with the support zone, near the support zone. But let's see whether this market is actually active or not. So I will be putting here the fast moving average, the 20-day moving average indicator. So I'll show you some simple method to understand whether market is in a good momentum or not. And average true range indicator, which measures volatility. So let it be 20 parameter of 20, and let's put a different color. Let it be orange, okay? So current volatility is worth 109 pips per day for Euro USD, okay? And 109 pips. What is the distance between the support and the current position of a price? What is the distance in terms of pips? So it's got to be 589 pips, right? Which is more than 3 times greater than the average volatility level, meaning that the market is very, very active. So what does that mean? What does that give us practically? So you can play the momentum situation here, meaning that market probably won't get to support anytime soon. So this situation probably is unlikely. So it will not go to support anytime soon. Before getting to the support, it might create another leg up. So that's the behavior of a momentum markets, momentum-based markets. It's much easier for the market of this strength to go in the direction of the trend. So meaning that it consolidates for several days, then it breaks out, goes to the upside, achieves some higher target, and then after that it consolidates, maybe collapses, but it will be later. So to play the momentum situation, that's a strong momentum situation. What do you need in this case? So you need to correctly identify the border of the formation or the trading range. What do I mean by that? Trading range basically, or formation, is a temporary consolidation, which might be built in a form of some flag or any triangle pattern, something like that. But it needs to be, you need to have at least 2 strong reactions. Strong reaction, by strong reaction I mean the strong sell-off from the peak, the one we had on April 11th, okay? Another one, we don't see that yet, so that's just a noise. That's just a noise, meaning that looks like some kind of price action, but in reality nothing really happens here. So what do you need to see here? You need to see the market, for example, coming higher, then retracing a little bit, and you will have the second reaction. So for example, by doing so, you will see the potential borders of a formation. So in that case, it might be flag or whatever it is. I don't actually distinguish flags from triangles from anything else, so they look pretty similarly. So these are just trading charts. So these are formations. Doesn't matter how you call them. I call it consolidation or coil if it's too narrow, but that's the moment. So whenever that happens, if the price holds this area, so the next entry point for you would be here. Very easy, right? It looks very easy, very simple. Nothing really complex here. So when the market is active, so the best thing that you can do is to just ride the trend, follow the trend. Nothing actually complex. I don't say it's easy. But usually what do traders do in such a situation? Why do they lose a lot of money? They lose a lot of money because they start to fade the trend pretty early. They say, okay, the trend is pretty overbought, so that's an overbought market condition. What we need to do is just to sell with a short stop loss. You don't want to do that. Maybe the market is overheated, but maybe later it will reverse, right? But before that, you might absolutely capture some nice trade here in the direction of the trend. I don't say that it's guaranteed. Of course not. Nothing is guaranteed in the market. But if you stick to the trend, the more you stick to the trend, the more chances of success you have. And of course, breakout might be false also. But what is beautiful about breakouts is that breakouts usually work like, so you can ride the breakout on a strong trend. So even if it fails, so you are able to protect your position with a break even. You don't lose anything here in this case. Let's say you enter the position, so your position is closed. That's it. You're out, but you haven't lost any money in this case. All right. You haven't lost any money in this case, and that might be potentially good for such a situation. Speaking of the daily chart, because we always refer to the market structure, right? Speaking of the daily chart, let's build the Bollinger Bands indicator, which measures the overbought condition, let's say. The condition of overbought market is when the market is doing what? When the market jumps away from the support and gets to the 2 standard deviation zone. So price was here on April 11th, all right, April 11th. Then it's consolidated, so I think it's Sunday, right? So now it's Tuesday, Sunday is 13th, so we don't count this bar, So basically it's the second bar, the second candlestick here. Third candlestick will be tomorrow. The fourth candlestick will be on Friday. So probably that it might continue to consolidate. Maybe it will break out earlier than on Thursday, but on Thursday it will be, guess what? It will be ECB publication of interest rate and the press conference of European Central Bank. So that might be the trigger for the market continuing to move up. I don't know, guys. So nobody knows what's gonna happen, but I think that's a no-brainer. Such a situation might be no-brainer, so you might build a position with a really small stop loss and a really extended move. I don't know how far it will go, we never know that, but at least I think that will be still a pretty good asymmetrical trading opportunity. Following the trend is much easier, at least if the trend is fundamentally backed. However, we might know that momentum trading strategies are not easy. What do I mean by that? If you jump in on the breakouts, so if you do that all the time in every situation, so your equity curve might look like that. Sometimes you catch some profit, sometimes you go to the plateau, to the drawdown, then again you catch a profit, you go to the plateau, to the drawdown, you catch a profit. So the average hit rate or the win rate for momentum trading strategies is less than 30% usually. So in other words, if you trade it manually with your own hands, the odds are so that you will get into this phase. So you will get stopped out trading the momentum. The odds are so. So, for example, there are strategies which involve 50% or 55% chance of being stopped out. These are mean reversion strategies. The profit is greater, but the probability of getting stopped is 50%. For momentum trading strategies is less than 30%. Usually is about 20%. So let's say that out of 5 entries, your just one entry will be successful. Okay, so for momentum trading, that's why it's so important, guys. It's so important to stick to the fundamentally strong situations. You don't want to get into this mess. Okay, you don't want to get here. What you really want to get is to try to increase the odds or the probabilities of getting into this phase. Okay, in the phase of growth. That's why we play only fundamentally strong situations with the momentum, and that prevents us from being stopped most of the time. That's really, really important, okay? That's really important. I don't know, guys, if it needs any more explanation, but it is what it is. If you jump at the peak of the day, if you sell at the bottom of the day, sometimes the market will expand. Sometimes the breakout will expand, but in many cases you will be stopped out. You will get a small stop loss, okay? We are bearish on, I'm reading chat, we are bearish on Euro USD, quarterly shifts and COT hedging program is suggesting the same. That's right, you might be right in the midterm, right? So in the long term, you might be right, but COT, the Commitment of Traders report, is not a short-term indicator. When you have a trending activity might dominate for some time. It may create some pressure, at least maybe for several days. We don't know how many days. But speaking of Commitment of Traders, right? If you're referring to Commitment of Traders, let's go to see quickly what is happening on the Euro FX chart. There's a US dollar index and there is a Euro FX. Let's watch the performance of Euro FX. And yes, we have the declining position of commercial traders, meaning that they are bottoming, but they are still far from the previous bottom. So I mean that if you notice, the previous bottom was at February, right? The beginning of, oh, sorry, it was not February, it was 2024, it was September, right? So we are not there yet. Market has not dipped yet below this point. So meaning that, okay, so as we don't have yet a new dip, so probably that might not be the peak yet for the price. I know that this indicator is lagging, so it's not showing you any meaningful timely signals, but it might show you potential closes. The price is close to establishing the peak, right? It's close, like it was here, for example, the same situation. So the price peaked, then another several days, you have several bullish days. So that's all you need, several bullish days for the continuation. Then it might be short, as you say. But we are not there yet, so the market has not dipped yet. So you see the position of commercial traders was at the dip here. It was at the dip here, but it was for a long time. It was dipping for the long time, actually. And a long time here, so it has taken a lot of days, a lot of, I would say, several months in order to find the peak. The same situation might be here. We don't know that yet. What I see right now, what I observe is the substantial strength of euro against the American dollar. So money flows out of the US dollar. Why am I saying that with such a confidence? Because other than just decline of the American dollar, we also have decline for US treasuries, rising yields of government bonds of the United States. That means that the money flows out. So there flows out of treasuries, they flow out of the US dollar. They go elsewhere. They go in gold, they go in overseas markets. So market is afraid, so it's going in cash. Domestically, they don't make foreign currency operations, but the money doesn't flow into the US dollar. High yields for treasuries, that might attract capital when the treasury market falls. So usually previously, institutional investors from overseas, from Europe, from Asia, they were picking the dip. They have been buying the dip. That's no longer so. So that's why I'm thinking that the situation with Euro USD is much more severe, much more serious than we think, and the continuation might be more extended than we think. So I think fundamentally we are in a stronger trend. So I would even advocate for a larger swing here. But let's see how it goes. So as you say, yes, we have some signs of increasing short positions for commitment of traders. We have that, though in order to make the conclusions out of this observation, we need to go to history and see how exactly the price had reacted on such advancement. All right, I think that the most interesting situation is potential short for crude oil, because there are so many bearish factors on crude oil. The only bullish factor is the negotiations between Steve Witkoff, the US administration, and Iran about nuclear program. So they claim that it was positive, that the results of talks were positive, but that's the only bullish factor. Other factors are all bearish. What do I mean by that? First of all, OPEC Plus had accelerated the increase in the output, so they will do that as soon as in May, but not in June. So that pressures the supply side. So the supply will be increased. In this case, the demand falls actually because of tariffs, because of the concerning situation, and we don't know that the interest rate yet has not been declined by the Fed. So the demand side is actually diminishing. So that's what we see in the form of STO, short-term energy market outlook. So we have the website of the official administration of the United States, U.S. Energy Administration, right? And if we go to their official website, we can go to short-term energy outlook. Here it is. So this is a forecast overview. Why do they think that the fair price is adjusted to 60, 55 and below? They say, we compelled modeling and analysis for this report on April 7th. It was just April 7th, guys, just before the yes, it was before the tariff easing. That's right. But still, the fundamental situation remains the same. Donald Trump signed an executive order announcing 10% tariffs on imports from all countries. That's pretty much, we're here, pretty much. Increased tariffs were lifted. OPEC Plus members announced on April 3rd that some countries will start production increases in May that were originally set for July. Following these announcements, the Brent crude oil spot price fell by 14% in April. We expect that prices for crude oil and other commodities will continue to experience significant volatility. Also, there is a contango effect in this market, meaning that the market is the short-term futures are priced lower than long-term futures, meaning that the short-term sentiment is negative. In what we need as speculators is a short-term sentiment. We don't need long-term sentiment, all right? So that's why I'm referring to this as a potential nice short opportunity. So I don't know exactly how the situation will play here, because currently we have fourth day of continuation today. So the market is now in the downside structure. So probably maybe today we might experience a sell-off on crude oil. Why am I referring to the today's action? So that's Sunday, that doesn't count, April 13. But let's count the number of days. Number one, it's Wednesday, right? When tariffs were lifted. It's Thursday. Sorry, it's Wednesday is the big bar, the big bullish bar. Then we got Thursday, Friday, Monday, which is yesterday, and today. So market is in a strong downtrend, and now this is a turning point. Today we have a turning point, meaning that the market, probably the fate of this rally will be defined today on the American session, I think. So if it goes higher or lower, if it keeps the momentum or declines. So I think that the fate of this rally will be determined today. And again in such a situation, so you may spot the opportunity if the price comes here to the top of the range, to the top of the Bollinger on the American session. So that might represent a pretty decent opportunity with a limited risk and extended downside potential. So what do I mean by that? So if you build a short position, I'm not sure that it will necessarily be successful, but if you build a short position like here, maybe, I don't know, maybe it will be below, but using volatility of the American session, right? For example, switching to the 5-minute chart, we can also observe something like, I don't know, market retracing back to the upper band of the Bollinger on 5-minute chart, something like that. Might be the adjusted entry point. So after that, if it doesn't hold, if the American session actually breaks the structure, so we might see the very, very sharp sell-off. Maybe some news announcement will come in, but sometimes crude oil falls without any news announcements. So that might actually be an interesting opportunity that's on my radar. I think that's the best opportunity for this week. But let's see how it goes. Let's make a screenshot of this situation. Let's make a screenshot. Absolutely, that might be interesting. All right, so not many people are trading crude oil, but many people are trading gold, right? What is about gold here? So let's make the same analysis which we've done with Euro USD. So for gold, we will put here, so we see the substantial momentum, right? And average to range indicator shows us the volatility had jumped. So it's now $55. Let's measure the price range. The price range, if we measure it from the beginning of the breakout and here, so it's $188 or $190 at the peak, which brings us to more than three daily volatilities here, more than 3 daily volatilities, okay, above the support. So potentially that's a momentum situation. The position of the price, of course, is not that good, so it's at the top of the Bollinger. But I think that at least for a couple of days, maybe we have upside pressure here, just like with Euro USD. Though I don't like the range here, so it's choppy action without any significant pullbacks. That's a choppy action. Maybe if the market will go down from this point, that's the way we will get the idea of a trading range. So something like that. Until then, we don't have it yet. But if we will have the downside pressure, that might behave like so it might shape the trading range. Okay, so if the price will come closer, so that might be the entry point for the short-term position. So getting on board, getting out pretty quickly. So you might actually capture some piece of the move here, just like with Euro USD. I'm not sure that will happen today. Today probably crude oil is in play, but gold, I think that gold might be tomorrow or day after tomorrow, something like that. However, it might be earlier. So yeah, currently we have a very strong situation with a trend. So it has a strong inertia, it has a strong pressure. But if you want to get the idea of what's going on with futures, for example, from the Chicago Mercantile Exchange, so also you see that the position of commercial traders has been going up for some time, and despite the rising price, it was going up. That's a very unusual situation when the price of gold is correlating with the position of commercial traders. Usually that's vice versa. Big speculators usually drive the action, and commercial traders, they usually act as a market maker, selling higher and buying lower. That's not the case. They act as if it is just the beginning of the rally. So they accumulate it. They act as if it's the beginning of the rally, really. So they say, okay, that's just the beginning of the trend. Trend will go to 4,000. But it absolutely can. We never know that, right? It absolutely can. So that's why I will not exclude anything, including the very strong advancement of gold here in this situation. However, of course, it's not a good entry point. Might be potentially at the peak. At least short stop loss, a small stop loss probably won't survive in this situation. But definitely I will be looking at the potential entry points here, and maybe I will what I would also do, I would search for opportunities to extend my profits if the position will work. I do that all the time, by the way. If I have a good position, so I'm asking myself, all right, Stan, how can we increase our output in this position? So maybe I should make a more distant target, place a trailing stop, or doing something like that. Because if you have a strong market, being with this market, sticking to this market, sticking to the trend is the best thing that you can do, actually. And for me, that's a no-brainer. Strong trend, stick to the strong trend. So just follow it while it goes. I think for gold, we have everything in place. Commitment of traders are increasing their long positions, safe haven. There are no other safe havens other than gold. Japanese yen also is not a good option here, but it's going up at the peak, right? Not a good trade location, not at the support, but at least the good momentum trade might be here. Interesting situation, interesting play, guys. For this week, that might be a really interesting week, I guess. Really interesting week. So be patient, keep the money in your pockets, don't overtrade, do not get into the good drawdowns until you get a really good entries, because all you need to have is 1 or 2 good trades per week. You don't need to have anything beyond that. Well, unless you are a scalper, of course. I don't know your trading style, guys. So, by the way, put something in chat, please. What trading style are you implying? Whether you're a scalper, a day trader, a swing trader, a position trader. So that's interesting to know. What are you doing in the market? What our audience is about? That's interesting to see what you're actually doing. All right, moving on. So for gold, we've observed the situation. So moving on to Bitcoin. Bitcoin is a lot more choppy, a lot less confident, but it feels at least much better than the majority of other altcoins. So Bitcoin, so ETH, for example, Ether looks much gloomier, I think. So it's not, it's just standing at the bottom. So that's not, so it just doesn't show any signs of strength. Unlike Bitcoin, it showed some signs of strength, but the growth is pretty sporadic, so it doesn't aggregate a lot of volume. And so that's what actually is going on. So to get the idea, guys, of what's going on in this market, you can actually track the publications. They're absolutely free on the Glassnode. So for example, from yesterday, Glassnode is a on-chain analytical resource which sells paid subscriptions, access to their dashboard, but you don't need them actually. So for many cases you don't need them for trading. What you actually need is to find some interesting snapshots from the on-chain analysis perspective. So let's go down to charts, straight to charts. What do we have here? All right, so these are some. Okay, that's not what we need. What we need here is the PDF. Wait a minute, dashboard provides in-depth insights. Okay, well, no, that's not what I was referring to. Yeah, weekly market pulse. That's exactly tariffs and control, weekly market pulse. So, yeah, you may watch this, for example. So, what do we have? Market realized value, net capital change breakdown. So what do we see here? We have large decline in capital flows in the Bitcoin market. And it was negative mostly. There was small plus here, +6 bits, above zero, so it's still above zero, but capital flows are declining substantially in comparison to the beginning of this year. They're declining substantially. For ETH, as you see, it's negative, so they have capital outflows already. So the number of capital inflows versus capital outflows is negative for ETH, but it's still positive for Bitcoin. It's still 6 billion inflow with the Bitcoin. So I think that the most action was performed from the last week when it was actually retracing from the bottom. All right, so what else do we have? Realized cap. The realized cap for Bitcoin versus ETH. For Bitcoin, it's plus 468 billion. For ETH, it's increased plus 61 billion. So it's less, substantially less for Ether. So MVRV, so market value versus realized value, shows that well, the ETH is kind of in oversold condition. It might be in the oversold condition, so it goes pretty massively to the downside, but it's not yet a buy opportunity, I think. All right, we need to dig into this data for a little bit, but let's go to charts, because what we want to care about is we want to know if we can trade anything here or not. Well, from this, so let's first build our structural elements, structural points which we need. I don't think that we even need moving averages here, because the market is still sideways, so it doesn't move anywhere. But what we might need is Bollinger Bands, and let's filter it out a little bit with a parameter of 50 to get the idea of where Bitcoin is located in terms of trading range. So it's located right above 50-day moving average and slightly above 20-day moving average. Currently, the market is located slightly below the upper border of the Bollinger Band, so it has some capacity to move higher, but still it, gravitates around the midpoint here, around the 20-day moving average. It gravitates around this area. Whether it will collapse here to this area or not, back to 82,000, we never know that yet, but the problematic point is not yet here. It will be slightly above. If it goes above 87, 88, that would be problematic point. Maybe it will go down deeper and it will go to another support here below. So that also is not an exclusion. I think that this scenario is slightly more probable, because currently with such a gloomy sentiment, so I think it has higher odds of revisiting the lower area of 77,000, 78,000. So maybe we can we can build some short position out of that. If you have some negative closing here, if you see the red bar coming in the next day you might think of getting in the position. So that might happen. So I would probably stick to this scenario, but I don't believe that the market will reach the upper destination here of the Bollinger, because I think it needs a lot more momentum, a lot more volume to drive the market higher. So, whether it doesn't matter what we actually believe, so we need to observe, and I think we need to find a confirmation. So that's not a good location to find a short right now. So I think we need some kind of confirmation. Of course, there is a chance that we will miss the big distribution day, the big red day. There is a chance that you will miss it, but in any case, in most cases, you might still get onto a pretty good trade even if you miss the initial move, okay? Like it was, for example, here, the same situation. You see the red bar, red candlestick, and then you see the sudden distribution, the big day, and another big day, and another big day. Market collapses fairly quickly here. So if I see the red day here on Bitcoin, maybe the next thing that I will do, I will focus on short for the very next day, or maybe at the day when the day closes, something like that, and that would be my potential entry point. Maybe not only Bitcoin, maybe I'll short something else, maybe ETH, because ETH is weaker, and I think even shorting the weaker instrument might be the better option in many cases. Also the same situation here. It might, if it makes you the red bar, so the next red bar might be sharp and drive the price to the new low. So I think that's pretty logical, right? Because we have a downtrend here. There's nothing fancy that we do here in the market, guys. Nothing fancy. So we're just following trends. We are not doing anything really fancy, anything really complicated. The price is still slightly below the 20-day moving average. If we place here Bollinger Bands with 50-day with 50, let's place it with 50, okay? We will understand that the 50 is above, but right here below on the 1400 we have some strong level here, which would be the lower band of the Bollinger. So if the price goes here, probably it's gonna stop maybe around this level. So that might be the closing point for closing the position if you go short. Something like that. So ETH is, I think, is a more bearish situation than Bitcoin. So, but Bitcoin, of course, will set the tone for the situation. All right, so that's an interesting week. Maybe what do we have in terms of S&P? So S&Ps is, I think, more difficult market to find the fit. And the spreads might be slightly higher here because that's a stock index. That's normal. I mean, volatility is slightly greater. Okay, reading chat. Let me read chat a little bit. Watching from Pakistan, Lahore. Hello, Lahore. Once I've been in Lahore. Once I was there, I was making a seminar, so nice to see you here from Lahore. All right, we don't have any more questions here. All right, so for Bitcoin, the situation is I think this. Let's make a screenshot of this chart, and later on we will combine them in a form of some kind of an overview. On the next streaming session, we will see how those ideas exactly were working. All right, so what else do we have other than crude oil, Euro USD, gold? So let's switch away a little bit from American dollar. What I wanna focus on a little bit is on Euro GBP, on Euro versus British pound. So my initial idea was short from the market jumping of the balance, jumping off the Bollinger here, and that was a short opportunity. We see that that's exactly how it's working right now. It works all the time. That's not a trading instrument. Whenever it pops up from the range, the next thing that it does, it goes back to the average. It goes back to the moving average, it goes back to the center of the range, whatever it is. So I think we're here inside of the mean reversion situation. So the support, the potential support zone is here. We are in the mean reversion situation. So now is the second day of the move. That's pretty difficult to say whether today the move will be continued. But it's not a question of today. So if you see today it's on the bottom, right? We know that it's not a good idea to make momentum shorts, because if you do the momentum short, the price will retrace, capture a stop, something like that. But if it jumps slightly above, if it jumps above the Bollinger, if it jumps above the formation, so that will be completely different story, completely different situation. So that might be already the decent timing or a decent entry point for the short. All right. So that's why I am putting another. That's a day trade situation, guys. That's a potential day trade, not necessarily for now, but maybe for the end of the day or maybe for the beginning of tomorrow. That we are here in the process of mean reversion. Okay, in the mean reversion, market getting back to the average, and that might be interesting because British pound had displayed a substantial weakness against the euro. So this week we will have ECB publication, ECB interest rate plus press conference, so the very important news announcements, and maybe such pivot will happen, you know, ahead of this publication, maybe on Thursday exactly. I don't know that yet exactly. All right, so yeah, Euro GBP is pretty interesting. So I don't know, guys, what exactly you're trading. Dollar index and Nasdaq. Okay, let's go through Nasdaq. Nasdaq is a technological index, so it aggregates a little bit more. It has a slightly greater portion of technological stocks in it in comparison to S&P 500. And as you see, the performance of Nasdaq has been gloomier in comparison to S&P 500, because with S&P 500 we have higher portion of industrial stocks, we have higher portion of consumer stocks, industrial, healthcare, financial, whatever it is. So just let's take a quick look. So what I want to show is a quick outlook of what's going on in sectors, in American sectors. Technology does not very well. Let me remove indicators. Financials, XLF, financials doing better, slightly better. Okay, let me do that one more time. Financials doing slightly better. Energy doing not so good at all. Communication, well, kind of not very good dynamics. So what I want to say is that S&P 500 has been a little bit stronger than Nasdaq, but if basically if the bullish sentiment prevails, so the pullback for Nasdaq might be more substantial, it might be more aggressive. So if we would go long, the position on Nasdaq would be more interesting play, because Nasdaq is oversold. The technological stocks are oversold in comparison to other stocks, so have been hit heavily. But I'm not sure that we are there yet, because volatility is pretty high yet, so above 30, so the VIX, or the volatility index of S&P 500, is still quite high. I'm not sure that we are there yet, so we necessarily should buy Nasdaq. Let's follow the news, guys. So I don't know that yet, so the situation is pretty choppy, it's pretty unstable, so I think we might have a big distribution bar. Maybe after that might be some buying opportunity, I don't know. Maybe after that, but not yet. But after that, if that happens, so Nasdaq might become the better play than S&P 500, because technological stocks are oversold in a greater pace. It was oversold much greater pace. So yeah, I guess that's what we see right now. So for now, for this week at least, I'm bearish on indices. I don't know exactly where they will turn, but I'm bearish on indices 100%. Why is that? Because I know how market behaves in a high volatile environment. So regardless of the good news coming in, they might have only short-term effect. Effect might be temporary, but the medium-term dynamics might be still bearish. So we are probably there. Maybe situation will change. We never know. Let's monitor the news, guys. So we don't have any strong upcoming news, but maybe, I don't know, what might be the game changer here. For example, Federal Reserve gathers together and Jerome Powell announces suddenly, we've analyzed the situation and we decided to drop the interest rate 2 points down out of the schedule, off the schedule. So if they do that, of course, markets will get immediate support. But until that happens, I don't think we have such strong drivers behind the price action yet. Alright guys, so I think that we're pretty much done for today. So I've observed all the situations that I wanted to review. So let's quickly go again through what we have right now. Euro USD and gold are momentum plays, potential momentum plays. If they hold in a consolidation, in a short-term consolidation, if they try to emerge from a consolidation, it might represent the bullish entry point. Gold and Euro USD. I think gold might be even stronger, of course, than Euro USD, but Euro USD is pretty strong too. What else? Crude oil might be problematic, in a problematic zone. If it doesn't hold this zone, it might dive in. It might dive deeper pretty sharply. So S&P 500, Nasdaq, they are problematic. The growth is problematic. It's not a short position yet because it's incredibly difficult to time the short position in the bear market, because the correctional bars, the bullish bars, are still pretty aggressive. So we don't know yet whether it's an end of correction or not. That's why timing short positions is an art. You need to be near the screen when that happens. You need to find the exact entry point, and the market is really sharp. It won't give you any time to make a decision, so it will just collapse, go down, and will not give you the entry point. That's why my attention is on gold and Euro USD potential long positions, short-term long positions, and crude oil potential medium-term position. That might be the good place for this week. Yeah, thank you very much. Exness has disclaimer. This webinar was provided solely for educational purposes, so don't treat it as investment advice or trading advice, nothing like that. That's just an information. I've managed to deliver my own opinion, which doesn't have to do anything with any recommendations. I'm not a financial advisor. And trading involves significant risk, especially if you trade with leverage. So with that, guys, thank you very much for coming. So let's meet another week, Tuesday, same time. Let's see how our projections worked, if any would work. Thank you very much. That was Stan, Senior Trading Specialist at Exness. See you next week on Tuesday. Watch us on YouTube, on Twitch, Facebook, wherever you want to watch us. Stick to your favorite social network, but communication is better on YouTube because I see comments here. So if you want to socialize, communicate, come to YouTube, subscribe to Exness channel and give us a